Right. Just gonna cover question 17, which is on IFRS 5, right? So let's quickly glance through the questions and then I will give you some guidance how to answer this. So question 17, basically this question 17 was a question 1 type consolidations question, but it was cash flow and it was amended 2018 question, right? So I'm not going to read the fact, the basics, the overview exhibit. I'm not going to read it because when you're going to do the cash flow questions, we're going to do these questions fully. So, but my focus here is on IFRS 5. So let's only focus on IFRS 5 questions. Number one, it is a 6 minutes question. So 1.8 into 6 that you have to do it that quick, right? And so given that, let's read using exhibit 3. So I put the exhibit under separate sheets, so it's easy for me. I've already highlighted the exhibit that I needed for this question. So it says using exhibit 3, I've been asked to advise the directors as to whether Watson should be classified as held for sale and whether both Watson and Barham should be classified as discontinued operations. So the minute that I read this question, right, section 3 of A, I'm able to relate to the standard that is required. The relevant standard has been identified here, right? So it is a non-current asset held for sale and discontinued operations, which has been IFR, which is the IFRS 5. It's related to the question that is it's not mentioned, it is not being mentioned in anywhere in this question that we've been applying for, but it was straightforward, right? So we've been asked to advise whether directors as to whether the Watson should be classified as held for sale. That's the first question, right? We don't know who's Watson, what company is Watson, but we know we've been asked to discuss whether Watson should be classified as held for sale. So we just need to know first what are the rules that relates to held for sale, right? So that's number one. Watson and held for sale, that's number one question that we should be answering. And then it's asking us whether both of these, Watson and Barham, whether they should be classified as discontinued operations. This is the question required, right? So I'm gonna straight go into the solution page now. So what I've done here, I've given you the marking scheme. So this kind of questions, right? This kind of questions, I've just given you guidance here, right? You don't have to write them, but this is what is for your mind when you plan your answers in the exam. So always remember, once you have identified the standard, the relevant standard, briefly state the principle or the concept or the rules related to that particular standard. So when I read it, I was asked about Moyes and Watson, right? That's one part. And then I was asked about Moyes and Barham. So I'm just going to deal with Moyes and Watson first, because if you see the solutions, they have taken um, Barham first. But you know, the order in which that we have gone through the topic, non-current assets held for sale was the first, and then the discontinued operations is what we learned at the end. So we don't have to change it. We just do the same way. So my first part of this here, I would put a headline. You can write here, you're dealing with Moyes and Watson, right? You can write here like Moyes um, interest in Watson. And so here the first would be IFRS 5, non-current asset held for sale. It is very important to have a subheading, and it is important to bold the subheadings, right? You're going to use the Excel spreadsheet, so it's much easier to bold them. And then presentations, professional skills marks will be easily scored, right? So if you just notice what I've just done here, I'm just going to briefly explain what is the non-current asset held for sale, right, on in this with regarding this question. So just simply what I've done it, I've just got whatever that we have done in the lecture notes, right? So this is what you would do first. You're just going to simply explain briefly or define what is non-current asset held for sale, right? So let me first show you this. I think I have done a brief flow chart for you. So when you think of fundamentals or the basics of IFRS 5, non-current asset held for sale, there are two parts for it. One is a non-current asset held for sale. Second part is the discontinued operations. So for us to treat an asset, for us to treat a non-current asset as held for sale, there are two main conditions. One, the asset must be immediately available for sale. I mean, there should be no changes that we should be doing it to the asset, but it is ready for sale immediately. And also the sale has to be highly probable. These are the two main conditions. And then we done this, and we looked into it. What are those highly probable means, right? So in an exam question, you do it quickly as possible. When you do this paragraph, first paragraph, just defining or introducing the standards to the examiner, it would enhance your chances. The examiner knows that that you have worked hard, right? That's the first bit. And then these are the highly probable. I don't have to go through all of them. I've done them in um, lectures. If you have missed it, then you please look back at the videos, right? So these has been done. This is what you would first do to write. So this video is about giving you guidance how to write a accounting standards question. So first step, you're just going to put a heading for the relevant standard, and you're going to apply the standards, or you're going to briefly define or give definitions of the concept or the principles or the rules of that standard, right? So we just know now what is IFRS 5 means, right? So presentation wise, once you say like there is measurement in between, and we have done an example there. So once we have a figure that we're going to report it as a non-current asset held for sale, what is the presentation implication? We just need to simply declare that asset under current assets. At the end of the current asset, we would say as a non-current asset held for sale. And then there are two other uh, presentations requirements are there, which we had already gone through in the lecture videos. And one would be that if anything that we have a related liability to this non-current asset, that also needs to be declared under the current liability as a liability that is connected to the non-current assets classified as held for sale. Then the second one, if there is any accumulated reserves like OCI figures gone to the related asset, if there's any OCI gone through to the reserves, under the reserves after all your equity parents shareholder funds, you just need to declare the that reserves separately. There are three declarations that we have related to non-current asset held for sale. In a single brief, in a nutshell, the changes that would appear related to the non-current asset held for sale would be on the balance sheet. The second rule that you need to remember, you see here, these are asset held for sale that we haven't sold the asset yet, right? These are the asset that is held for sale, held for sale. We wanted to sell it, but we haven't sold it yet, but we have a plan to sell it within 12 months. So if that was the case, I can treat the asset as an held for sale, right? Once I've done it, then I don't have to declare depreciation, right? From the classified. I hope you know that we've done the lecture notes, right? Now let's read only the part that is related to the Watson case. I strongly believe you have attempted this question. Now, to pass the exam, rule number one is this, very simple. You must attempt the questions by yourself. How hard it is, how difficult it is, you must attempt it by yourself. That's rule number one. You must not look at the solutions until you complete it. This is the steps. These are the steps you need to do. First, you attempt the questions fully, regardless of whether it is difficult. You know how far you could do. If you get stuck, assume, make an assumptions, finish the question. Then the second step is where that you just need to look the video, right, which I'm going to upload. And once you've done it, then you would know where you went wrong. Then you have a clear understanding. Once it is done, third step is where that you would look at the solutions, which is the solutions I would also cover through the videos. Then the final step is where that you would finalize your notes, exam summary notes. Exam summary notes should come at the end. Probably 2 months or 3 months before the exam is where that you start to memorize them. So you don't do that early part. So if you're just going to memorize early stages now, put a lot of hours, right? Then once, when you reach 1 month before the exam, you would find that you have wasted time, right? Let's quickly read this down. So we have here a Moyes, right? Moyes hold 52% of equity interest in Watson. That means Moyes, in this example, has 52%. So 52 percentage means over 50%. That means Moyes had control. So Moyes is the parent, and then the Watson is the subsidiary. That's how far that we understand from that particular line. Then Watson has previously issued share options to the other entities. Who's Watson? Watson is the subsidiary. Now, before I just come to this particular line, let me first explain something else first, right? So we know shares, right? Say Watson, there is a reason why that they have given us a percentage that is very close to the threshold boundary, it is very close to the 50%. So anything could happen to flip the situations here. Say, for example, this Watson, right? So I hope you remember when we covered, not yet. I think we will be covering this in the consolidations. Uh, Something called actual sales, and also there is something called deemed disposal, actual disposal, deemed disposal. So in this example here, right, Moyes has only 52%. Moyes did not assume that Moyes did not sell a single shares to anyone else. So we should know that Moyes still should be able to maintain its control. Why? Because Moyes has not sold any shares of Watson, right? Moyes bought Watson shares, 52% of shares Moyes had it. Therefore, Moyes would be able to control it, right? Did not sell. But what would happen if this Watson issued new shares, right? The Watson issued new shares to outsiders, not to Watson, but to the not to the Moyes, but to the outsiders. If Watson issued new shares, say that Watson issued 1 million, say it issued 1 million new shares, right, to the outsiders, 1 million number of new shares to the outside. What's going to happen to it? I'm using the word issued, right? I'm using the word issued. Issued means we have already given new shares. So the minute Watson issued a new shares, the total number of shares of this Watson subsidiary gonna go large, isn't it? So it was whatever figure before plus 1 million would be the total shares. So now for us to find how much control the Moyes, let me give an example. Uh, Say earlier it had 52%, right? Total shares was, say, like it was 100, right? So when I check the earlier positions, when I check the earlier position, that means 52 shares it had out of the Moyes was owning 52 shares out of the total shares of 100 the Watson had. So percentage was how much? 52%, right? Like I said in this example. But see the second scenario. Now what has happened? The Watson has issued some new shares, not to Moyes, but for the outsiders. But then in this case, Watson share would remains the same, 100. But sorry, Moyes shares would remains the same, 100. But Watson shares, how much it's going to be? So sorry, this should be 52, right? So the Moyes shares remain the same at 52. But Watson shares, subsidiary shares is not only 100 plus 1 million, isn't it? I've just made a number of 1 million. Let me change this to after 1,000, 3,000. It's changed to 1,000. Let me change this to 1,000 shares so it's more easy, right? So like it issued new shares to the outside. So what's going to be the percentage now? 52 divided by 1,000. You can see here. It has just simply just from 52%, from 52 ownership, the Moyes ownership dropped to 5%. So what I'm trying to explain here is this, right? Even Moyes has not, in this example, Moyes did not sell a single share. Without even selling single shares, Moyes has lost control over Watson and from 52% to dropped to 5%. How? Simply because Watson has issued shares to the outsiders. Therefore, the share ownership got diluted. What Moyes share ownership got diluted. This is just an example, nothing to do with the questions. But this question, Watson has not issued new shares. If this was the case, there was an actual sales has taken place, isn't it? So we will be deconsolidating because actual sales has taken place. But in this question, it was not an actual sales, right? What Watson has done, Watson has issued not shares. Watson has issued what? Share options, right? It has issued shares. So what are share options? Share options are, it would give the right for the other persons to buy our shares, but not the obligation. So, and it says, so now he not issued shares, he issued new shares for options, right? Because if we give options at the exercise date, when the right date, that means exercisable date, all the other parties would exercise these shares at that date where new shares would be issued. Once the new shares are issued on that date, when 30th of September 2009, that means today was 30th of September 2018. So in 1 year time, what's going to happen? All those share option holders going to exercise their share options and going to become shareholders. So at that time where the 1,000 new shares going to come, so in 1 year time, Moyes shareholding going to drop from 52% to 35%. That's the question. This is I've just done for the purpose of explaining, right? Let me take it off because some students just only watch they would only see the solutions rather than watching the videos, right? So that is certified. Now we have clear understanding what's going to happen in 1 year time. These share option holders going to exercise the shares. So what Moyes, who had earlier 52% of the control, now it's going to drop to 35%, right? So there is a loss of control, and they're going to lose control. But there is no actual sales. From Moyes' point of view, there was no actual sales. And Moyes did not sell any single share, so there was not actual sale. But what has happened here, this is a deemed disposal situation, right? So deemed disposal situations under IFRS 10 and IASB. What is the requirement here? We know the financial consolidations, financial reporting are prepared for the purpose of economic substance. They not for taking account of the legal status, but the economic substance of the transaction. So in substance, this is a significant event which gonna change the relationship between the what Moyes, who's the investor, and Watson, who's the investee. It's a relationship gonna change significantly. Why Moyes would not be able to control Watson after 1 year when the others gonna exercise the shares, right? So in consolidations, when you do consolidations under disposal, chapter 13, we would learn that when this take place, when this happens on that deemed disposal, when we lose control on that day, we are expected to declare like deconsolidations need to be done. That means we have to remove the that particular subsidiary from our books. Like the calculations of group profit or loss on disposal, on deemed disposals need to be done on that day, right? This is related on to the consolidations chapter 13. So now we come back to this particular point, which is on disposal, right? We want to know whether we haven't sold it. This is where it relates to non-current asset held for sale, right? So what they're saying here, we haven't, the actual, the exactly, there is no actual sale, but the deemed disposal, there going to be a deemed disposal going to take place, right? On 30th of September 2019. That means in 1 year time, whether Moy is going to sell his shares or not, there would be a deemed disposal. As a result of it, he's going to lose control. We are standing today at 30th of September 18, and we now know within 1 year, 12 months time, there would be a deemed disposal. If there is a disposal, we have an asset, we have a subsidiary, and then it's going to be sold within 1 year, then that it should be treated as a non-current asset held for sale. And the question is, should we treat this as a non-current asset held for sale or shouldn't we? This is what the question is about, right? Now let's come back to this answer part, right? So we for the first part of the answer, because I'm taking the non-current asset held for sale first. We have clearly declared it. We have defined it. What a non-current asset held for sales means, and what are the two main conditions. And then when you discuss the second point, and you would, I've just briefly pointed out, but you must write in sort of a paragraph. I would show you in a minute, right? So here you would first discuss, right? For us to treat a non-current asset held for sale, we should have a plan to sell the asset. There should be an actual plan to sell the assets. That's the first. So in this example, there are no actual plan. Moyes has no actual plan to sell his assets, right? There is no actual plan to sell his assets. So first the first argument is that because there is no actual plan to sell the assets, it shouldn't be declared. It shouldn't be classified as non-current asset held for sale. That's the first argument, right? So, here, the first paragraphs, I'm taking this as first. IFRS does not, like, it start from here. The first part is the classification, which we have already done, defining it. To be classified as held for sale, a sale has to be highly probable and the entity should be available for sale in the present condition. Those are the two conditions. We have highlighted that. We have just put our defined it. the definition has been defined, right? So we have no problem with it. But then the first one at the face value, that means from looking at the paragraph first, we know Watson should not appear to meet this definition. According to this definition, there must be a plan. The asset must be immediately available for sale, and there must be a plan to sell. Here, actually, there is no plan for sale by Watson, isn't it? So Watson would not meet this definition, as no sales transaction is to take place, right? This is a deemed disposal, not an actual disposal. So that's the first point that you would highlight. So once it is done, then the second point you would say, but you would, then the next paragraph you would say, however, then where that your highlight subheading would be deemed disposal as a result of loss of control, under that you would explain saying this, even though there is no actual disposal, but in 1 year time, those share, the certainty, there is certainty that the others going to exercise their share options. Therefore, in 1 year time, Watson gonna lose what the Moyes gonna lose control over Watson without selling one single share, which is known as deemed disposal. So here you would highlight IFRS 5 doesn't extend to that, for business disposal, right? So IFRS 5 doesn't explicitly extend the requirement for held for sale to the situations where the control is lost. But however, we know the IASB's requirement. According to the IASB, we prepare accounts for the substance of the economic substance of the transaction. So this is due to this event, there are going to be a significant change between the investor and the investees. Relationship going to change. Now, no more after this event, within 1 year, it's no longer going to be parent subsidiary. Isn't it? Maybe if they sold everything, nothing there, or maybe a simple investments or an associate. So that's what we need to highlight it clearly, right? So that the instance where control is lost. Right? So the subsidiaries assets and liabilities should be derecorded. So these are the guidance from IASB and also IFRS 10. If you lose control over even you lose control through deemed disposal, we should de-recognize, deconsolidate the subsidiary from our books. And also we have to calculate group profit or loss on deemed disposal. Then loss of control is a significant economic event, fundamentally changes the investor-investor relationship. I have highlighted it. Therefore, the way that we present, right? Because there is no clear guidance on IFRS 5. So now we are saying, earlier we said according to the rules that it shouldn't be declared as a non-current asset, but now we are saying, by looking at the economic substance of these transactions, it should. So therefore, the situations where the parent is committed to lose control, that should trigger a reclassifications for held for sale, whether this should be extended to the situations where the control is lost due to the other, and then so on, right? So it is possible, therefore, Watson should be classified as held for sale, right? That's the first part of the question. So that is what we would do. It's very clear. I hope it's not a difficult part of the questions when you declare non-current asset held for sale. First, we should have a plan to sell the assets and it is immediately available for sale. If these two conditions are not there, then we can't classify as held for sale, meaning we would move the assets from non-current assets from a balance sheet and we would push it under as a current assets, right? Under the current assets. So, and then there will be no depreciations charged once it is classified. So we would first point would be there is no actual sales, and the second we would say there is a deemed disposal. We may lose control. There is a disposal because of we losing shares. Watson has issued some share options. We would highlight that point. And once we highlight that point, we would say that it is possible that it could be classified as held for sale. The second part of the question is that whether the Watson can be declared as a discontinued operation. That's the second part of this question, right? So, but to be classified discontinued, Watson would also do, right? So in order to, I would explain that and I'll come back because the other definition is the discontinued operations, right? Let's now we have done the first part of this question. So the second part of the question is where it is about discontinued operations. So what I've done again, I've just, when you you need to have sort of a steps. First, we would briefly define the relevant accounting standards, its concept, principle, or the rules. So I have dealing with IFRS 5 discontinued operations. I've clearly, briefly explained you what is discontinued operations means, right? So this is what is discontinued operations means. The second part, right? What in terms what we meant by discontinued operations? The idea is this: it can happen in two ways. One is that I have sold the business division. I have a major business line or a major geographical area which I have sold it, right? So because if I sold it and it is my major business line, that could be, that can be, that should be declared as a discontinued operations. Because why? Then only the users or the stakeholders would get a clear picture. Because if I have a loss on my profit and loss account from the division that I've sold it, then the stakeholders would know that that division would not appear in the next year, right? So that's one. For that means three conditions. It must be a major business line or geographical area that I have sold it, or I'm planning to sell, right? It is a major business line or a geographical area of my business, which I have a plan to sell within 12 months, right? So if these satisfy, then I should be declaring as a discontinued operations. Or third one is where it is a subsidiary that I purchased. When I purchased it exclusively, my idea is to resell. So if that was the case, the subsidiary should be declared under discontinued operations. Then the another additional condition, if I have a plan to sell, that plan or the disposal that done should have been done within a one single sale transaction, right? So once all these conditions satisfied, and if we know we're going to declare and discontinue operations, the presentation is going to be on the profit and loss account. In that case, we would separate our profit and loss account into two major sections. One is the continued operation. That means all other business. So for example, if I had I think I've explained this earlier, A, B, and C there, my business divisions, and I've C, B is where that I have decided, I have sold it, or I've decided to sell it in the next 1 year. Then this would not appear on my continued operation. My continued operations would be these two. My sales revenue here, for example, if I have a sales revenue, right? If I have a sales revenue here, my sales revenue, and this is 120, and then this is 30, and then this is say like 10. And on a consolidated figure, I would only have for a continued operations 120 plus 10. The 30 would not appear there, right? This 30 figure, where it would appear under here, right? I would have a profit for the figure. I would not classify or present them like this individually, sales revenue, cost of sales. I don't have to do that breakdown. Rather than I just take the one figure, I would look the B's line, and I will look how much is the profit for the year at the end, and that figure would be declared as a discounted profit from profit for the year from discounted operation. This is the presentation requirement. Now let's come back to the question requirement here. I'm dealing with Barham. Let's read Barham. I think in order to read Barham, it's better to start from here, right? It says during the year end 30th of September 18, Moyes acquired 60% of subsidiary and also sold all the equity interest in Barham for cash. We still don't know how much sales or shares that the Barham had, whether it is a subsidiary or not. But what we know from this here, we have sold it. Moyes has sold the shares fully, right? So remember when I started the discontinued operations, I said two ways this could happen. One, we may have sold already. Second, we have a plan to sell it, right, within 12 months, right? If either way, it would be qualified under discontinued operations, provided other conditions are met. So that's case A. So we have already sold it. So here, thereafter, the considerations for Devonport is, I think, maybe some another previous questions or any other questions on this consolidations. So I'm going to skip the Devonport's part here. So I would be looking at only Moyes. So here, 80% of the equity shares of Barham had been acquired several years ago. Now we know what percentage. So it purchased 80%, right? It was purchased 80% of the shares several years ago. Barham became my subsidiary, and had been several years ago. And then Moyes had decided to sell as the performance of Barham had been poor for a number of years. As a result, Barham had a substantial overdraft of a disposal date. Barham was unable to pay any dividends during the final year. And then there's about the other Devon company. So in brief, right, in brief, the problem here, they have already sold Barham, right? You know, when you present your profit and loss account, and if a division has been sold and that division is a major business line, then that figure need to be declared separately under a separate line as discontinued line. Why? Then only that the presented financial statements would give useful informations to the users, right? So for that purpose, we need to, provided it is material, provided it is relevant, then we should be declaring that figure under, presenting that figure like Barham's profit for the year figure as a discontinued operation, provided it is a major business line or a geographical area and there is a single plan to sell. So we can say it has been sold. So only just need to check whether it is a major business line or not. So I just need to find that information. So the directors of Moyes wish for advice as to whether disposal of Barham should be treated as a discontinued operations and separately disclosed with a consolidated statement of profit and loss. We know, isn't it? This is what we say. If it is declared as a discontinued operations, in that case, under the profit and loss account, we would have only one line, right? Profit for the year. That's what is required if under the, if you're going to treat it as a discontinued operations. So they're saying there are several other subsidiaries with all produce similar products to Baham and operate in a similar geographic area. Why this is being given? Now look at the way that the plan that I give you to write these kind of questions. First, you would define the standards, briefly give the definitions. What is discontinued operations means for an entity, or and also you would clearly identify it has to be a component of the entity. Component is where that the division that you're going to sell should be a component of it. That means for that division, you should be able to identify this cash flow separately from the other divisions, its profit and loss account separately from the other divisions, its budget plan separately from the other divisions, right? It should look like an independent division. This is what we're trying to explain from the word of component entity. So, but it is very clear that no point of selling a divisions, right? And but it has to be, it should be, or it must be a major business line that you sold, right? So if we can prove it is a major business line, then we would say that it need to be classified as a discontinued operations. So in this, the problem of this question here, right? So by giving these kind of words, right? By giving these kind of words like see sentence, like say all the other subsidiaries produce similar product to Barham. So there is no major business. It's indicate that there are not major business line. It's not clear, to be honest, from this, right? And operate in a similar geographical area. So by giving these two lines, examiner is questioning, right? He is doubting whether this condition has not, whether this condition is achieved or not. That means the separate business line, right? That's the question. Very simple. So the next line, when you're gonna write here your answers, right? You're applying the case now. You're applying this rule now. You would say that you know, it is very subjective. You know, what is a major business line depends on for each. It depends on each company, how they're gonna define, how they're gonna define their operational segments, right? That's how it did. So it is subjective. This is one of the critical point of IFRS 5. So let's look at the first part of it. As I said, the first you would simply define what is IFRS 5 and what is discontinued operations means, what are the three conditions. You can simply do it. Now you would apply the second paragraph here, you're applying the case. Both entities should be components of Moyes Group since the operations cash flows are clearly distinguishable from for the reporting entity purpose. Of what we're trying to say here, we know what are the conditions. We wrote the definitions here. We did write them. We said, what about the component entity? Now we are applying it. By looking at it, we can say they have their own financial statements, cash flows, and figures. So it is, they should be easily distinguishable. Therefore, they are component of the entity. So now we're talking about Baham. Baham has been already sold, right, during the year. So it is not about an asset held for sale. It is a discontinued operation case, but there appear to be other subsidiaries which operate in a similar geographical area. So we just need to know whether it is a major business line or a major geographical area to produce similar. So little guidance is given as to what would constitute a separate major line of the business or geography. This is the weakness, inconsistency part of IFRS 5, right? Because each business can define what is a major business line in its own term. And so the definition is subjective, and the director should consider factors such as materiality and relevance before determining whether Baham should be presented. So what they're saying at the end, when we learned conceptual framework, the qualitative characteristics of financial statement, financial reporting, or the useful information we are trying to give, it depends on the two factors, isn't it? One is the materiality and then the relevance, right? Provided an item is material and relevant for the users, so in that case, presenting them in the financial statement would be most appropriate way. So that's how you would finish this question. So it is not the difficult questions, but in terms of IFRS 5. So your learning outcome would be how are you going to apply them, right? So as I said, if you want to pass, right, you have number one rule is that you have to be honest to yourself, right? Without trying a past paper questions, and it's going to be difficult, right? I'm not going to in the video. I'm not going to give you much advice. I'll see you on the next video, right? I hope it's you understood. If you have any questions, please reach out to me. Let me stop the recording. I'll see you.